Hi, I'm Danny Ecker with your Chicago Business Today Midday Report. Just as NATO protesters file out of town, demonstrators are rallying today against CME Group ahead of the trading firm's annual shareholders meeting. 15 people were arrested this morning while protesting roughly $85 million in tax breaks granted to CME last year by the state of Illinois. More demonstrations are planned throughout the day, and here to talk more about the goings-on at the world's largest futures trading company is Crain's senior reporter Lynn Merrick. Lynn, put these protests, first of all, in the context of the problems that CME is facing right now in general.
Well, the protesters are really upset about something that kind of happened last year. They're upset about tax breaks, what they call tax breaks, that CME got when the legislature essentially said, hey, we're going to make sure that CME is paying the same taxes on transactions outside the state that other companies do. So in CME's mind, it was really more just kind of right-sizing its taxes, and actually they say the benefit is more like 50 to 65 million. Other challenges that they're facing are really a drop in trading volume. So that's much more likely to come up at the shareholders meeting, and just fallout from the collapse of MF Global.
And the stock has dropped steadily for the last couple of months, another issue. And then the news yesterday, of course, the CME now reportedly out of the bidding for the London Metal Exchange. What was your take and what were analysts saying about that, and whether or not that was a big miss for CME, or whether maybe some of their competitors are paying too much?
It's hard to know for sure if it's a huge miss for CME without seeing the books, because to really understand its value, you have to know what its future growth potential is. But it would have been a good fit for CME because it has the precious metals exchange, and LME, the London Metal Exchange, has industrial metals like nickel and aluminum. So the two would have fit together pretty nicely, so people might be a little upset about that. But if you're going to see the price of it driven up over 2 billion British pounds, it becomes questionable whether that's a good purchase.
Right. And now we may see if CME tries to just start their own platform on that just from scratch.
It's possible, but it's really difficult. Analysts kind of, say, they could pursue that, but it's really difficult to build liquidity because once you have one place where everybody trades, it's hard to steal that away to a different exchange.
All right, Lynn. Thanks for the insight.